What is a full-time trader, guys? Doesn't have to work outside of that source. So using trading as a full-time income and doesn't have to work outside of trading to derive that income. That's a perfect example, isn't it? Often people say to me, I go, what's a full-time trader? And they go, somebody trading full-time. But the time bit is the bit in that question, isn't it? What is a full-time trader? But really a full-time trader is just somebody who derives their income from the market.
Positive, especially this weekend of the Art of Trading. Really concreted and solidly made me feel like I have made the right decision, and it's made me very excited about the future. Because I had no experience in the trade market, I still didn't know whether they were just another black suit trying to take my money, until this weekend concretely confirmed everything, and it was so amazing to see that they really are a family and they really are a tight-knit community.
My experience was very rewarding. The staff, I think, are so dedicated that it's a great atmosphere that you want to be around.
And we were talking about that risk and reward and how important that is, and what's my whole strategy for risk management, and if I'm having different portfolios, is my risk management strategy going to be different?
John Gow was unemployed when he started investing in shares through Wealth Within, a guide to help do-it-yourself investors make some smart decisions.
With trading, it's not about being in the market all the time. It's about just being in the market when it's the right time, because the share market, you can just trade with your laptop. I'm not being told what I can and can't do by a boss.
What your goal is what you can see in the future, isn't it? Yeah? Right now you don't know what you don't know, do you? And it's like sailing a boat. If you go out sailing the boat, you can see the horizon, but then when you get there, you see another horizon. So as you're walking the journey from where you are to where you want to be, the more you can see and the more you can perceive that you can do and the more you can perceive that you can achieve, yeah?
Joining us this morning on Studio 10 is financial expert Dale Gilham. Hi, Dale. Finance expert Dale Gilham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show. Good evening and welcome to Wealth Within Live, the Australian stock market show where you get to ask us the questions and we give you the answers about all things investing and trading. Now, tonight we've put together a slightly different show for you than we have been doing the past few months. We are sort of combining two things into one. Now, for those of you who've been watching our channel for quite a long time, you'll know that occasionally we record our thoughts on some stocks that we believe will be good to watch for a buy in the coming months. So tonight we'll incorporate that into our live show for you, and we'll give you 5 stocks tonight, and next week we're going to make you come back and watch the other 5 stocks. But it's also the 4th Tuesday in the month, and that means we'll get into giving you our thoughts on world currency. Now, as always, we'll answer your questions and look at the stocks you're interested in and give you our expert opinion and a whole lot more. Hello, I'm Dale Gilham, Chief Analyst here at Wealth Within, and joining me tonight is Janine Cox, our Super Special Senior Analyst, and we're Australia's most trusted stock market educators.
Hi Dale, how are you going today?
Good.
You had a good day today?
I know, I haven't seen you all day. I haven't seen you all day. It's been one of those days,
You missed me, didn't you?
Absolutely. I always miss it when you're not around.
I missed you too.
Did
We're
you?
having a bit of a love moment here.
Yeah, we do. We're sort of like an old married couple. Some days we're yelling at each other. No, we're not.
Yeah, that's true.
we do like to have a little fun. I mean, obviously the share market can get a bit dry at times. And
Yeah.
sometimes it's nice just to have a little bit of a laugh and a bit of fun. But the market's been interesting, hasn't it?
It has. Look, I mean, it never stops testing us, does it?
No, and I think it's quite interesting. And I know I've said a few times, a quote, what a wise man learns more from a dumb question than the person asking it. But we see a lot of stuff happening around these times with people, their thoughts on the market. They're generally wrong. They're making decisions of selling stocks or buying stocks, or and they're generally trying to bottom pick, or they're making very emotional decisions on their portfolio and their stocks, really out of fear and greed. And it's
look,
really
I think
interesting.
our market and the US market, I think there's more to go. Like I think you've been telling people that each week in the report.
Nobody believes me.
They're not listening. Is that
Well,
what
these
you're
guys do, but nobody else does.
Okay.
So,
we don't care about them. We just care about you guys and what you're doing, really.
But have you been watching in the US news? I mean, yesterday I did my interview with Jim Beach, which was out today, obviously on a YouTube channel. And I was chatting to Jim. I said, this time last year when I launched my book in the US, Jim interviewed me, and it was all doom and gloom, market crashes, serious doom and gloom. And I kept saying to Jim, no, it's bullish. And I think I did 17 radio interviews in 5 hours overnight between actually it was longer than that. It was like from 7 p.m. till about 4 a.m. to launch the book, because you're going from east to west coast on the US, and that's a long distance. But and I remember I kept saying to these interviewers, the market's bullish, and they were all telling me it was dangerous, it was bearish, and they were shocked. And I had a lot of interviews over those coming months. And now you look at the news now in the US over the last couple of weeks, it's completely changed.
Yeah.
It is completely changed, and that's what we keep saying to people is the technicals or the charts will lead the market, not the other way. And
well, the reporting season's going reasonably well at the moment.
Yeah. I talked a bit about that with Jim yesterday, and like Coke had good reporting and a few others. But this is the interesting one you may not have seen is obviously retail sales were down a tad in the US.
You talked about Boeing
month
as well, didn't you?
Yeah, and I talked a bit about Boeing as well and a few other stocks. But interestingly...
Apple, that Rhoda mentioned as well?
They've
done well, actually.
I just buy their products.
Okay.
So they make enough money out of me. Apple is the biggest. Out of the stocks in the Dow, Apple's risen the most out of all the stocks in the Dow in the last 12 months. Or in this calendar year, sorry. But what I was saying is that the market is, while consumer discretionary, there's some stocks in that are flying at the moment in the US. Now, consumer confidence is up in the US. So what does that tell you?
That's not going to stop.
It tells you a hell of a lot. It's not going to stop. Unemployment's at its lowest level in so many years. And people are still telling me the US is a basket case. And it's like, well, I don't know, but the charts are telling us it looks good. So our market looks really good anyway.
Well, shall we get into it then?
Oh, do you really? Okay, well, let's get into it.
If you have a burning question for us, or on the right of your screen is a chat box, so put your questions there. Also, hi to anyone new to the show. We're excited to see new names every week coming through. And moving on, it's the fourth Tuesday, as Dale said, in the month, and that means that we're going to have a good look at world currencies. So let's get into that now, shall we? Now, on the screen there, I've got a number of currencies there listed. What we've done is ordered it from the highest return for the month down to the lowest return for the month. Now you can see there that the British pound is down 3.5%. No surprise to see the British pound down that low at the moment, given what's going on in the UK and the issues around Brexit. And also we've got the Japanese yen sitting on top at the moment, which is interesting. The Japanese economy has always been an issue. There's been issues about the percentage of retirees, and at one stage they were talking about Australia and trying to suggest that Australia was going to end up a bit like Japan, where you've got so many older people, there's not enough young people being born in the country to be able to sustain that growth going forward, and Australia could end up in the same boat in another 20 or 30 years with the amount of people that are due to retire. So it'll be interesting to see what happens with us down the track. But looking at the list there, you can see there's a lot of obscure currencies compared or pairs with the Australian dollar. We don't usually look at all of these. You've got the Saudi Rial and the Qatar, Solomon Islands at the top, all positive up there. The US dollar is actually, Australian dollar versus the US dollar, up 1.74%. We've also got the Chinese renminbi up 0.7%. the Swiss franc, I can actually remember people investing in the Swiss franc many, many years ago and losing a lot of money. So at times there are safe havens around the world where people try to park their money, and at times it can be a very dangerous place. I think the Turkish lira really suffered, didn't it? That was earlier this year or last year, was it?
Yeah,
that really got sold down heavily, and you know, there were a lot of people who basically lost everything in a very short space of time in terms of the value of the currency and what that meant to their bottom line.
Yeah, no, a lot of people don't consider it, do they, when they're looking at currencies and looking at investing, and I know...
Well, there are people in Australia that actually were not born here, that have got their funds parked in other countries, and the risks around that, you know, is huge.
Well, yeah, a mate of mine, he worked in the UK for close to 10 years, and actually met his wife, and they married there, and they're both living back here in Australia, and you know, got 2 kids, and I'm the godfather. That's strange, isn't it? I'm the godfather, and it's like, yeah, looking to me for your instructions. So,
you'll be able to teach them about
they've
the
got
market.
a UK pension, and so you know, he was talking to me about it the other week about what do I do? Do I bring it to Australia or whatever else? And I said, well, right now the Aussie dollars, you know, it's looking okay against the UK pound from what it has been, but you got to have a look at that, and is it better to leave it in the UK pound or bring it over here? And the same with the US dollar. Like the Aussie dollar's way down on the US dollar, but that would say to me, if you've got US shares, then you need to start worrying about that, because the Aussie dollar's only going to go one way, and that's up. Probably, and we'll have a look at the chart of that anyway, but it may not go up next week. But when it's down this low, it needs to start moving up again.
Well, the currency traders will be excited about that.
Yeah, and so the currency traders will be excited about it, but you need to look at that anyway.
All right. We're, I think, in the top 6 currencies in the world, Australians.
Yeah, I think so, yeah, because we're quite stable because of our government, that sort of stuff. And overseas countries or big institutions like stable governments, and they like stable laws and good laws when they're investing in countries, and Australia is called a safe haven around the world. And so that's why, you know, our currency does look good, and we're very well respected around the world because of our safe banking system, even though we don't like the banks. They didn't crash, they didn't collapse.
But you know, a month doesn't really mean much.
No.
There are figures that get quoted around in the media. They talk about the daily figures and the weekly figures, and even for the month, really doesn't mean a lot. But we're just showing you that, you know, that there is a huge difference around the world in terms of the swings in the currency movements against the Australian dollar, and it's just interesting to look at, I think. Now, we've got a couple of charts to have a look at as well.
Yeah, we'll look at the Aussie US dollar, and we'll probably look at the euro as well, because that'll be interesting, and the Great British Pound, because obviously we've got Brexit coming up, which is likely to happen, or it's looking more likely it will happen. So they're probably the ones that we probably need to look at.
So looking at the Australian dollar versus the euro on the screen there, so if anyone's travelling to Europe, this might be something that's interesting for you if you've got family over there as well. Looking at the situation, we can see that there's just been this gradual slide down to, and it's not too far off from where we're at with the US dollar. We're around 61.6 cents Australian dollar versus the euro at the moment. So it's looking like it's trying to stabilise itself. This sort of pattern arrangement that we're seeing on the chart now can actually be a turnaround sign. So that there's a possibility that we may now see it start to move back up. We could see it head above that 62 cent mark. But of course, if we saw it push back, we've always got to have the downside covered as well. So if we actually see it get down below that 60.8 cents, I think it is, then we could see a further decline in this pair. But at the moment, it looks like it's trying to stabilise itself. Look at the ranges of the monthly bar on this monthly chart. I'll just expand it up. This is what's really interesting with stocks as well. When you start to see these ranges reducing, often there's a bit of equilibrium coming into it. So the buyers and the sellers are reaching equilibrium, and then we could see a move off from the bottom of that. You know, and that could happen any time over the next couple of months. So looking at the British pound, we can see there that it's kept falling. And this looked similar to the Australian dollar versus Canadian dollar as well, because the Canadian dollar was stabilising and looked quite strong. But the British pound has kept going, it's kept falling. And so therefore, there's only more declines likely after a move like that, you would say. So there's a possibility that we could see, and I haven't got the analysis sitting there on the chart at the moment, but we could see it head closer to that 50, 51 cent mark over the coming months.
So
if it takes out this month's low, then we know that's roughly where it's headed.
I know some people look at these and they go, "Wow, it's falling away. The British pound's falling." No, the British pound's getting stronger against the Australian dollar in this chart. So it's really funny. You got to look at it in reverse. So I know when I first travelled to the UK, it was like 40 something pence for my dollar, and it's like, geez, pizza cost me a fortune. I'd need to have a mortgage on my pizza.
I won't ask you how long ago that was.
That was a couple of weeks ago.
Okay. All right then, Australian dollar versus the Hong Kong dollar. Nice to have a good look at the Hong Kong dollar. We can see that it's already started to make this nice move up off the bottom, and this is a really important time for this currency pair, and could see a turnaround being confirmed over the coming weeks. Look, I like the look of that one. You wanted to talk about one more, did you?
You've done the US dollar?
So I did every one except for the ones that you wanted me to do, didn't I?
The US dollar is the most important one.
Australian
if you haven't
dollar
done
versus
that
the
one.
US dollar. Here we go.
Gee, so should I sack you or something?
It's not much different. Every chart looks the same.
It does.
Okay, so here we go. We're looking at the Australian dollar versus the US dollar, and we can see there that it's trading at around 68 cents at the moment. And this similar pattern that we saw on the Hong Kong dollar, the Australian dollar versus Hong Kong dollar, is happening with the US dollar, and so we could see the whole lot move together at the same time. That's what I'm suggesting.
Interesting to see if the US Fed Reserve drops their interest rates one more time and we keep ours where they are. What will happen?
Okay, well look, they're saying the Australian, the RBA is going to drop.
Well, no, they're not. They're saying after last week, they're saying some of the figures they've got, they may be putting it off.
Well, it depends who you read, because I hear that we could have one more drop in February. Boxing gloves, let's get them on and see how we go. Actually, you were going to bring some boxing gloves into the studio. What happened to those?
I was. I couldn't find any pink ones for you.
Okay.
Something like that.
All right then.
Well, let's get into we've got some emails to get into now. So, but otherwise we'll
on
be
a more serious note, is it?
That's on a more serious note. So we've got some emails we need to get into, and the first one is from Matt. So, but thanks for sending your emails in, guys. It really is good, and sometimes it explains a little bit more than you can put on the chat. So, but Matt said the first one, as I said, somehow I actually missed his email last week. He actually sent it in. And for some reason, it went into that I couldn't figure out where it was pile. Okay. And then I found it today, and I went, therefore, Matt, sorry about that, matey, but I will do your email right now. Matt says, I'm interested in your opinion on Codan, which is a stock ticket code CDA. So it has been on a tear. Now, I reckon that must mean it must be going up pretty fast. Currently in a pullback. Also, Xero has been sideways for a long time. Currently look like close to breaking out on a daily and weekly levels. I have read your book, Accelerate Your Wealth. I bought the US version by mistake, but I figure the info is the same. Yeah, it is. And a lot of people are buying the ebook version, I suppose, if your electronic version off Amazon, and that's if it's got green writing on it, that's the US version, and the same stuff. It's just using the stocks from the Dow to apply on the work, where the Aussie book is using the top 20 stocks on the Australian market. Now, he says, I note in your book you talk about uptrends for 3 months. Trends happen in multiple different time frames, maybe from days, weeks, months, and years. So it's about, there's two things I talk about all the time. One is content and the other one's context. So you've got to keep everything within context. So just saying a trend is 3 months may not be saying it in the right context, and it just depends on what kind of portfolio you're managing or you're wanting to manage or what you're doing. So we need to keep it like that. The book is more about medium to longer term trading, not short term stuff, so therefore we've got to keep that in that context. But he goes on to say Xero would be classified as a pullback for 2 months on a long term uptrend, is why I'm interested with the possible breakout, possibly on daily to continue the long-term trend. I'd forget the word daily and take it right out of your sentences, matey, because daily is next to useless to you as a trader. And I'll say that again, and most people might be shocked at this. Daily charts are next to useless to you, and taking signals on a daily basis are pretty much next to useless to you as well. So good traders don't use daily charts very often because they are very inconsistent and prone to false triggers, and that's why most traders get it wrong. So, but especially for long term and medium term, you don't need daily charts at all. He's interested in my thoughts, and I like your YouTube videos and analysis on there. It's great. After reading the book, I'm now looking to close my managed fund, which is nice. He he's got a separately managed account and reinvest in his own scans and look at the charts and take control of his own life, which is fantastic.
Done, Matt. Good on
It's
you.
great to see people taking control of their own life, and we are going to bring up the stock for you. So just grab up that portfolio, that one, the watch list that I put it all in. So you've got all that, and you've got to put it on the right stock. It's CDA on the left.
Okay.
And then I think
So look at that. I mean, it's just taken off like a rocket. So back here we saw this sideways consolidation, and sideways consolidations can actually be a precursor to a significant growth. Now, when the stock actually traded above this point here, it was a signal that it was at least going to go to the all-time high and possibly through it, which it did really nicely. So let's have a look at how far it actually appreciated from that point. So if you'd actually picked it up when it was going to break out, you'd actually have a nice profit of about 70%. So that looks interesting, doesn't it? Looking at I just want to have a quick flick across to the weekly chart. Let's just have a look at we should be able to get volume in there somewhere, and have a look at the volume on this stock. We can see there the huge spike, and that was one of the reasons why I wanted to show you this, because it actually rose so strongly and the volume was going with it. So that's often a really good sign that, if all the traders are behind it and the volume keeps rising, that's telling you that it's going to keep rising after that point, more than likely, to continue to make a high. But eventually the volume will drop off as some of the profit takers come in, and the share price will come back. So I would say that looking at this, it may be getting close to a point where it's going to come back for a few weeks, given it's just had such a strong rally and given what the volume's showing. But notice how low the volume was prior to all that happening.
It's almost non-existent, wasn't it?
Yeah, so that's one of the things you watch out for. And we don't use volume a lot in trading, because with medium to longer term trading, it's not so important. But with the short term trading that we look at, volume can be very helpful in picking up these moves and allow you to get in on them. So well done if you picked up that one. At the moment, if I was looking at this stock, I wouldn't be looking to enter it at the moment. I'd be looking to preserve what I had.
No, you're right, and it does look a little bit indecisive at the moment, but it could just be taking a breather for the next move up. But that's why you put your stop losses on it. So,
yep, and we've got Zero as well. So Zero, similar thing. We can see this breakout that unfolded on Zero, a different shape though to the one that we saw on CDA. So that's something to it's really important that you learn a lot of these pattern and recognise the patterns and recognise the momentum behind the shares and what's going on, because some of these patterns can be false triggers. Now, I'm not saying that in the case of this stock it is, but it looks like one of those typical ones where it'll break out and then come back later on, and try to come back into the angle of that rise. So we could see that occur in the short term, a bit of a pullback before it tries to take off.
It's going to change personalities in my mind, because now we're talking about a stock that's around $70. So
well,
all of those
it's getting
people
towards
that like to buy
$100,
cheap,
isn't it?
Yeah, it's going to change.
They're not looking at
personality.
it anymore.
No.
But they're not necessarily the ones that have the big money to drive it anyway.
No,
they
don't, but they're the ones that would have driven it earlier on
Yeah.
in the piece and taken that spike out at 2013. So they were trying to drive it then. So at this point in time, when it's $70, you're going to get a different type of investor or
It's
trader
an interesting
into it.
thought, though, isn't it? The fact that when stocks get to a higher dollar value like that people turn away from it because they think I'd rather buy a stock that's 60 cents and I can get more of them.
Isn't that stupid?
Yeah, there's
It's
just no logic there, because
well,
you're
there's
talking
zero
about
logic.
percentages here. We're not talking about how many shares you can buy.
Yeah, it's not like buying ice creams. It really isn't. It's like how much money you're going to make, and that's really what people
What
don't
made you
do.
think of ice cream?
I love ice cream, but I'm not allowed to eat it at the moment
Do
because
you
I've
know
got to
what's
lose
really
some weight.
weird? Like we spend too much time together.
We do.
Because actually we haven't lately, which is unfortunate. But we, because I was actually thinking on the way here that I was going to have a bit of a chit chat at the start about my favourite ice cream, because someone was talking to me yesterday about Ben and Jerry's. Do you know Ben and Jerry's ice
No, I've
cream?
never had it.
Yeah, it's really
It's
nice
not
ice
Aussie.
cream.
It's
but,
not Aussie, so I'm
but
having
you can
Aussie
get
ice
better
cream.
Australian ice cream
I know
anyway.
you could.
However, they sell these things that are they're little, like a little cake covered in chocolate. So it's like an ice cream round disc.
Oh yeah.
So yeah, but that is particularly yummy, I'd have to say.
That sounds bad for you. Yeah.
So you just thought of ice cream, and then I just went with it.
I know. Sometimes
Maybe
we
we
wear
can
the
have
same
some ice
colour
cream on
just
the
by
show
not
at some
knowing
stage.
it. I know. No, we're
Maybe
not
we get
doing
some
that.
sponsors.
Just read the next question, okay?
Okay, well, I haven't finished this one yet.
Okay.
Okay, notice on the monthly chart how the highs of the month are actually getting just slightly higher, but not significantly higher. It's also indicating that it's slowing down. So things to just be mindful of when you're looking at this share. But right now, I mean, I wouldn't be looking at purchasing a stock that's been running like that. I'd be looking at setting a tight stop loss on it if I was managing it. And you can use some of the previous lows to do that, but you might have a specific level that's important to you that you've worked out, or a specific rule that's better on this stock. But you have to backtest it to find that out. All right, now the next one, Zoe. Fantastic to get a lady on. Is that why you put my name on this one?
Yep, absolutely.
Yep, giving me the ladies. That's great. Hi, Dale and team. Portfolio, medium, long term. That's your portfolio. Growth and income is your strategy, I gather. Oh, look, this is exciting to see someone who's actually thought about this.
I told you, you're going to love this question.
Yeah, it was right in my ballpark.
Absolutely.
I'm mostly invested into blue chip shares, another tick. I'm looking to buy Coles, so I'm not so sure, but what are your thoughts? Reason, it is currently on a strong positive uptrend, 8 months, okay, good. She's looking at for trends, that's awesome. Coles Group has a higher ROE than the average 10% in the consumer retailing industry. You're losing me a little bit on the fundamentals.
Return on equity.
Yep. Coles has established a 5-year turnaround plan with the aim of not cutting dividends, restoring profit growth and maintaining market share. Now, that news on its own actually did help the share price of Coles. Coles forecasts that the company will return to profit growth in 2021 by slashing $1 billion in costs over 4 years. Geez, I mean, I've known people who've worked at Coles in the past, and I'd hate to be working there under that circumstance.
If they're cutting $1 billion, yeah.
Just not going to be pretty. 4 years and slowing the opening of new stores to focus on online and convenience avenues. Thanks heaps, Zoe. By the way, look for Australian made, Australian owned, and a product of Australia when you go shopping at Coles.
Oh yeah, that's hard to find. I find it I'd sit there reading the labels. I can't find much.
Oh, I make a huge effort to do it. It's really important to me.
I do an effort, but I don't shop much at Coles anymore. I go everywhere. I go to local supermarkets and the IGAs a lot more nowadays.
Oh, okay, that's fantastic. Yeah. Going for the independents.
Yeah, I know. Well, your frequent flyer points at Coles, it's like you can buy an ice cream. That's about all you can get after about 5 years. So, but anyway, okay. So let's answer the question.
Don't you want those little plastic toys?
No, I don't want that. No, you can keep your plastic toys.
I don't want them either.
So go to Coles.
Okay, Coles, we've got Coles on there, and you can see the monthly chart's looking fantastic at the moment. It's had a good run. Look, I think there's still a potential for a bit more upside with the Coles share price. However, I wouldn't, if you weren't in it now, then I wouldn't be picking it right now, because I think we're going to have a little bit of a pullback, and then I think there'll be a further run up on the Coles share price. We could see it get to sort of around the 16.20, 16.40 mark before it then has a bigger, slightly bigger turn. But looking good on Coles at the moment. If you've got it, you'd be just running with it and using a trailing stop loss to manage your downside.
Yeah, and I'd also be careful on a lot of the news that companies put out news that they want you to hear all of the time. It doesn't necessarily mean it comes to fruition. And talking, saying, what we're going to be doing in 2024 or 25.
Well, the market starts to factor it in if they think it's really going to make a big impact on the share price. It's already factored in, so the share price goes up, which is what we've seen happen.
Yeah.
And then the mums and dads hear about the shares doing really well, and they hear about this news after the fact. And so that's when the mums and dads are getting in, which is, I'll show you on the chart, that's where mums and dads are getting in, right here.
Right at the end of it, yeah.
Whereas the institutions are getting in down here.
And you've got more competition coming into the market still with the supermarket. So there's a lot of things happening in the next 2 to 5 years in this space.
Oh, it's big in Australia at the moment. I don't know. I actually don't believe in competition for competition's sake, just to continue to try to make things cheaper and cheaper for consumers and then totally blow up our whole industry. I just don't agree with the Competition Consumer Commission's whole process of that. It needs to be a balanced perspective.
No, I'm agreeing with you, because there's more. If there's more supermarkets, there's more jobs, but that's only part of the equation, isn't it? Really.
Yeah, it's not just the jobs. It's trying to make prices more competitive for consumers, which is fair enough.
I hate the home brand type stuff. I
really
do.
Yeah.
I'd rather support.
I want choice.
Yeah, I'd like to pick up. Yeah, you go to Coles and you try and find a packet of, pasta, and it's all just home brand pasta. Yeah, but sometimes it's like hard finding the ones that you want, or the brands you want, and that's why I go to these IGAs and other things now, and the local fruit and veggies and the local butchers, because you got better service and you got more friendly people and you can get what you want. So anyway, but that's my beef. But How about we get into the first two stocks now? As Janine and I have done a few times on our YouTube channel, we've actually done a recording where we've said, these are the hot stocks that we're looking at coming forward over the next one.
It could be into
quarter,
2020 as well.
Yeah, I'm just talking the next 1 year. So, and before we start talking about the first couple of stocks that we're going to get to, Janine and I are technical analysts. So anybody out there that's hard and die-hard fundamentalists, we're not going to talk about the management, we're not going to talk about EPS and dividend yields and those sorts of things. So we're talking from a technical perspective, and as we were saying a little bit earlier, the charts will lead the stock, so we're doing it from that basis. Also, these stocks may or may not trigger a buy. They're just ones that are looking good right now. In a few weeks' time we might get some more data and it might change our opinion, but right now we do like these stocks for a possible buy in the not too distant future, and we think they'll do well into 2020. So, but now let's get into those first two stocks that we've picked.
Just before I start, I'll bring up the first one, and as I do, I'll just talk about the fact that we look at for our direct equity managed account service, we look at the top 300 shares. However, predominantly we're in the top 100 because they're the bigger, more liquid stocks. And so what we've looked at is a few stocks that come out of that. And like Dale said, we've got 5 this week and 5 for you to come back and have a look at next week. But then we've got a watch list of 30 or 40 shares that we're really focused on all the time. And that can get slightly larger and it can shrink down depending on what's happening with the market. So it's important for you to think about too how you would have your own watch list set up and what how you're going to arrange all of that, what's going to take priority, because there are so many shares on the market. So
well, they are, and people often like to, and like the ASX shareholder survey said, 80% of people do it themselves.
Yeah,
80%, and yet we all know that they don't know what they're doing, and they say they want more control. But like, how do you have control out of something that's out of control?
Yeah,
when you don't have
rules. Or it can get out of control.
Or it can get out of control when volatility happens. And to me, it's this thing is people pick the wrong stocks for their portfolio. And we've spoken a lot about that over some of the previous shows in the last couple of months about getting the right stock. So just because you get an expert saying, I like X, Y, and Z stock, doesn't mean you should put it into your portfolio.
Yeah. Look, someone said to me the other day, they said, look, thanks to you guys, I made the first 100% on one of the shares that I bought.
Oh, awesome.
Which is great.
Did they offer you 10%?
No, I don't want the money. They offered, they said to me, well, look, it's been fantastic and I've learnt a lot, and just seeing the signals, seeing things trigger and how the stock unfolds and then recognising it, ignoring all the news. That's what they did, because they were a type of person that would listen to all the reports before and now they don't. But when we're picking these shares, like Computershare is a really good example of one. We're just looking for, as Dale said, the big quality stocks. Now, it doesn't mean that this stock is going to trigger in the next month or so. It may do. But what it means is that at some stage over the coming months, it could trigger a buy. And therefore, when it does, we're ready and we know what rules we're going to use to trade it. So, that's the thing to think about when you're looking at stocks. So, and there are often a number of buy opportunities. So a stock might present a buy opportunity and we know what the win potential return is from that particular trade, but then it may trigger another buy opportunity. Correct. So for example, with direct equity, when we're running the funds for people or the accounts for people, we can purchase it on one occasion, then we might get another entry opportunity as well, understanding what the risk and the reward scenario is. And that's really important for you when you're looking to purchase shares, that you understand what the upside is and also what the downside risk is. Not just what's my stop loss, but how is this stock likely to unfold if it does fall away. That's so important.
All right, let's get into the stocks. So we've got to get into the chat too, because they're going berserk over there on the chat.
Okay.
It's melting down.
Here we go. We've got like a nice downtrend that happened. This is monthly chart of Computershare. And it typically does this. It's an interesting thing with Computershare to study it over time. Is you have a look at how it actually unfolds. And we can see here at the top, if we look down, we've got roughly 30% falls in those cases. So we know that it's got to go at least to around 30% before it actually stops and starts moving up. And then we look for the signs of it turning, which it shows all sorts of signs, doesn't it?
And it trends so well, this stock.
This stock, yeah, it's incredible.
It's so easy to make money on this stock if you've got the right rules.
Once it gets going. And you can trade this one more medium to longer term and make some really good money. Look at the runs. This is what you want to look for, stocks that trend really well over the medium to long term. It's much easier to make money out of those.
They're not going to give you a heart attack, are they, when they go?
No. That's right. So if we put it in context with what the stock's done in the past, then this stock, if it gets going again, then and notice how I said if. I'm not falling in love with the prediction. I'm just saying that this has got the potential to rise, and we're expecting to see it get to anywhere up around this $18 in the short to medium term, and possibly even challenge the all-time high. And if you look at what it's done in the past, in this case, it actually traded through the all-time high and reversed. You think that it's got a potential to at least get back up to that point.
And that's a good, nice little profit.
Yeah.
So, and it is. It's and obviously you think if we're thinking the stock market's going to be bullish, Computershare will obviously go bullish.
Being a big stock. But there can always be situations where something happens in relation to the company, the markets that it's in, and that gets affected, and that could, cause it to go the other way. That's always possible.
Yeah.
But looking at it now, it looks really nice. Good to see Computershare on the list.
Yeah, I like it once it sort of gets above that sort of 1650 odd market there. So to me, I think as it starts to move off and get some momentum, then it's would be presenting a nice opportunity for a medium term for your portfolio. So I like it. So what's the next stock we got?
All right. Now, BlueScope's always a favourite with a lot of traders. It's a really good trading stock. Yeah, I know you like it. And but looking at it, it's really odd how it's unfolded down at this level here on the right there. So in 2019, it really has struggled to move on. And look, that's to be expected given the strength of the rise that we've seen. Now, let's have a look, because I know that there were quite a lot of our traders trade this stock. A lot of our students trade this stock. Now, it went up around 527%. So you'd think that, okay, a stock that's really a small penny, dreadful type stock is what you want to look for, but you're ignoring what huge opportunities there are in big stocks like this one that can be have the nice levels of volatility, but at the same time, you can find some really good rules to trade this particular stock. Now, at the moment, we've seen it move up here. I'm not 100% convinced just yet that it's going to take off. It's been trying to take off, but this is a sideways move on the monthly.
A lot of support between that $10 and $11 mark over the last 3 or 4 years. So it's to me, if it does take off, there could be going through that previous high that you've seen there on the chart and really take off. And I think it's a good shorter term trading stock. But it's also good medium to longer term, and it trends well when it does it. So if this thing hits another trend, then it could be a very, very good trade. But again, that's what Janae's saying, it's got to trigger the buy.
Yes.
And that's really what it's about, is we always talk about trade on confirmation, not speculation. And so many people, not on just this show, but on Facebook and that, just go, this is cheap, should I buy now? And that's never the question you should be asking.
Or they're sitting on the edge of their seats because someone is saying to them, this is a good stock. Or this stock has potential, or the fundamentals look great, or the technicals look great, and then they want to go and buy it just because they've said that. But you've got to. We're not saying to you to go and purchase stocks just because we're talking about them on this this show. It's more about, okay, well, if you're going to trade a stock, how are you going to trade it, and what's your risk management process and your money management process going to be? And look, you can see in the case of BlueScope still, there is some short-term resistance at around 1270, which is where it's heading to now. So it'll be interesting to see where it closes at the end of the week.
Yeah, but it is a nice one. So let's get into the chat. Okay. So I've written some stocks down here for you. Now I'll go and find the questions for the people, and we'll get into the stocks.
Okay.
And we'll keep moving fast because we're halfway through the show and we've got to cover a hell of a lot of stuff.
All right, let's go.
But this one's from, I think the first one's from Jay. He said, hi, loving the channel. Would love to get your opinion on CMP and PNV. We'll cover one of those stocks, CMP. Okay. They are both moving up. I'm thinking of buying and setting a stop loss on both. Don't ever think about setting a stop loss, Jay. Just do it.
Yep, exactly.
Or should I wait a bit longer? So we'll have a look at CNP, but never, ever, ever trade without having a stop loss. And if you're a buy and hold person, then that's the choice. You buy and hold and you take the ups and downs. If you're trading, and especially a stock like this, you trade this without a stop loss, you're one of those people that I don't like to talk about.
I think it's more like if you want to accept whatever the market's going to dish out to you, then buy and hold. Yeah. But if you're the type of person that you don't want to accept what people are going to dish out to you and they're going to try to take your money at the end of the day, then you want to be a bit more active in it.
This is so volatile. So
looking at this one, how do you say that? Compumedics, is it?
I can't even read it, little I've got to put my glasses on for this one.
Yeah, it's incredibly volatile, like you say.
I think we've looked at this a few months back, actually.
Did we? Well, just look at the monthly bar. So if we look at how far it went in 1 month, it was 48% in a month. But then look at the downside, because we can't just look at the downside. In this case here, the range for the month was 42. So like Dale said, the swings are huge. The liquidity of the stock wasn't actually any good until 2015. So it's only the past few years that have actually seen this stock actually be picked up. by more people since it's come off this bottom here. So it is good from the point of view that it has come off the bottom, and I'm actually liking where it is currently, but it would really need to stay above that 60-70 cent mark. Otherwise, if it goes back below that, it's potential.
We're talking maybe a
fall away
million
again.
shares traded in a month.
Right.
So it's not highly liquid. You go to the weekly chart or the daily chart and you see what it is. Just looking at that, I wouldn't trade this myself with all my knowledge. I just think it's a lot of work.
The volume per week on this one is 250,000 shares a week. It's really nothing. So therefore, that's why you get this sort of move. So you could be waiting for years and years to see something happen and then do your dough anyway.
So pick an
that's
easier
the problem.
stock.
Yeah.
Okay, next one we've got is from
Quickly go.
Vinit. Vinit, it says, hello, first thank you for the live video. Thanks, matey. It's great to see you supporting the channel. Remember, hit the subscribe button, do that, and like the channel and type some more comments in it. So I'd love you to do that. Vinit says, can you please provide insight on real estate stocks? I know you like to talk a little bit about real estate stocks, and he just mentioned stocks like Stocklands and Mirvac Group. Since housing industry is again booming, well, I wouldn't say it's booming, but it's getting better.
Well, they're not saying it's booming. In fact, they're still trying to talk the market down constantly. And when the industry tries to talk the market down constantly, then it tells me something that it's not as bad as what they were making out. So looking at Stocklands, we can see...
I've got to finish my question first.
Oh, okay.
No, not my question, Vinny's. He said, I'm looking to enter Stocklands share and they are near the 52 weeks high.
Okay.
I haven't heard the 52 weeks high and low from somebody.
That's what I looked at when I first started looking at the share market. That's so scary, isn't it?
Sorry, Vinny, we're not having a go at you, but
it's
just a sign that
reminiscing.
you're a very novice person in the marketplace. So
you're not meaning to be rude.
Not meaning to be rude, sorry.
So look, looking at the stock, good that you're looking at the real estate stocks because they pay good dividends, which actually can help a little bit. And there are certain times of the year that they do that. So you really want to have a look at when they pay dividends, when they go ex-dividend, and what happens. So it's do that study over. It should do it over any share that you've actually got, just so that you understand it better. But the real estate stocks in particular are important there. Okay. So looking at Stockland, you can see really strong at the moment and looking good. So if you're in the stock now, then you're doing quite well. But I think it's getting really close to important resistance. So really strong resistance historically has been around that $5 mark. So I'd say that it's got the potential to go through it, but then it could turn shortly after, because I can tell you that there's some resistance somewhere around the 550, 580 mark as well. So still a nice short-term opportunity there for whoever's currently holding the stock. Okay. And that's Stockland. Did you want to talk about another real estate one or just the one?
No, we've had a bit of a comment on it. So let's look at Brambles for Cherie. I know she's really cool. She's doing our trading mentor course. I've been working with her the last 2 weeks. I think it's the same Cherie. So put your thumbs up, Cherie, if it is, and nod your head this way. And it'll come through the screen with me. Yeah. But she's doing some awesome work on back testing and so she's going to be a really good trader actually. But yeah, she's looking at Brambles.
All these ladies coming through.
Yeah, I'll see if she's got a question outside of Brambles, but you keep going.
Now, Brambles is interesting, isn't it? Because the stock had made an all-time high in October 2007, and why it's interesting is because the stock hasn't even traded above it yet. So like our market, it's still lagging below that level. And we've seen this massive pullback into the low here in June 2018, and then a strong rise out of that. So to me, this looks like it's getting on its way now again. It's heading up higher. Now, I mean, this is a good trading stock. We've traded it a couple of times as well in the past and made some good money out of it. And, the key was getting out before this fall here, which was the timing. It was great. And this was just based on a simple set of rules that we use when managing client accounts. So, that can help you avoid some of this huge volatility in stocks like this. And this stock does this. This is what you've got to recognise, that you've got to classify stocks as to how volatile they tend to be. If you trade a stock once and it does this, it's not necessarily a good idea to continue to hold it, because you've got to know where it is in the big picture. So right here, it's really, you can see how messy this stock is.
Yeah, it is.
From a volatility point of view, which makes it more high risk, and it means that it can turn around.
You need a high level of skill to manage that risk, and most people don't know. They just see it swing up.
Well, they just hear the news and think, oh, Brambles is doing well, that we've got to get in on this company and then buy the stock, and then don't realise that that's actually what's there, because they're not even looking at a chart.
Well, my podcast that went out today in our e-news, if you haven't got it, just subscribe to our new news, you'll get my podcast. I was talking a little bit more about that ASX shareholder survey.
Okay.
But I said the number one consideration for people, their first consideration is return.
Yep.
nothing else can return, getting a higher return. So people see a stock that moves really fast like brambles and go into that, not thinking of the risk they're taking.
Yes.
That's really what I'm saying, and most people don't understand that. And when it falls away, they don't know how to handle it. So, but Cherie, do some testing on it. Shoot a chart to me, and I'll have a look at it and see how you go on it, and we'll see if we can get a nice little trading strategy on it for you. So
brambles is quite challenging, let me say.
Let's go to the next stock. Otherwise,
Okay,
I'm going to
next
keep
one.
pushing you along because we've got to get it.
Fantastic. Can we
Daniel
talk
says, Cherie's also looking at S32, but I don't want that. But
Okay.
stay out of S32 at the moment, Cherie. Daniel's looking at JBH.
JBH?
Yeah, he said, hi, Dale and Janine. I'm looking to add to my portfolio for 2 stocks and considering JB
Okay.
Hi-Fi or Treasury Wines. Don't like Treasury Wines, but let's have a look
Now,
at
JB Hi-Fi's already run, in my
It's already
opinion.
run.
I think it's got a little bit more to go, but I don't see the upside in this particular stock for people. So I'd say if you haven't been in it, then you wouldn't. If you're in it, I think it looks really good for those of you who are in this stock. Get some really nice rules. Get Dale's book if you haven't got it already. Get the trend line rules happening, and get a trailing stop loss under there.
Yep.
All right.
Okay, so
JBH.
now we're going to, that's with JBH, isn't it?
Yeah, we've just done it.
Okay, so we've got another email I'll do quickly. It's from Sterling, who asks, hi team, I'm a newcomer to your channel. I'm very much enjoying your insights and I'd like to hear your thoughts on Cochlear. I love Cochlear. He talks about since Q4 2018-19, it's been a good run, reaching an all-time high in July, and since then it's traded sideways between 200 and 220. Having not yet enrolled in your course, I'm wondering what your charts are telling you about this stock's short-term direction. And additionally, if you could note where and why you start your trend line from a stock on such a stock like this. At different start points tell very different stories. Now, interesting, he said, keep up the good work. Trend lines are going to be something we're not going to cover here tonight, matey. It's just not possible. I got to teach you a whole lot of stuff before I start talking about where the start points is. Basically,
even before you're talking trend lines, there's a whole lot of things that you need to know before you get to drawing the line.
You can read my book and you will not know how to do the trend lines that we teach in our course, in our diploma course, because we have 5 rules on that. In the book, there's basically 1 rule, but just start from the lowest low you can find or the highest high. But you are right, it does change the actual probabilities that you're going to have, the better you are at trend lines, and it does change how you look at the stock depending on where you put your trend lines. But it is something that
actually you can get it less wrong on the monthly chart.
You get less wrong on the monthly chart.
There are less points to draw the trend line from. Makes it easier, and
So
this is
Cochlear
where we
looks
suggest
good.
you start.
Cochlear looks good, and it looks a little bit bearish now, but I don't know, I wouldn't get in it right now. I'd just be sitting back waiting.
Okay, we're going retro again with the screen.
Our screen's gone green.
Now,
That's nice.
yeah, you're exactly right with the bearishness. This, I mean, the bar this week has actually changed the whole picture on Cochlear. So that's why you actually have to take all the data in and not assume that it's going to continue to rise, because probably up until the 18th of October, it looked like it could keep going up. But it's really sideways, that whole move sideways. So look, we like Cochlear as a stock to trade. Right now, we don't like it. So
No, but we do like it as a stock all the
On the
time.
watch
We're
list.
constantly,
Yeah.
I've had this one on our watch list because it's one of these brilliant stocks like CSL, Wes Farmers, Woolworths. They're really great stocks.
just
I'm
being
always
like a
looking-
tiger, ready to pounce. That's the
Yeah,
whole
we'll sit
idea,
back
isn't
and
it?
wait for it, and when it starts to take off, we'll get into it. But right now, it's a little bit too early for you. But it does run really, really well on trend lines now. I got something I want to talk about too. Before we get into the next 3 stocks that Janine and I have selected, or what we select as good stocks for the future or the upcoming year. Now, I've just wanted to mention that today I was chatting to, the 10 traders that I'm mentoring.
Oh, yeah.
that I
Actually,
have.
I sent an email off to one of them, Veronica, wasn't it?
Yeah, I handballed it to you because Veronica is awesome. And
Yeah.
she's another lady. I know you like working with ladies, so I didn't handball you, Veronica, if you're watching it. I just thought Janine would like
You
to say
said
hello
handball.
from that point. But there's 10 traders that I'm mentoring that we talked about a few months back, and I've been mentoring them. But one of the guys that I'm mentoring has had to delay his course, not delay his course. What do you call it? Defer.
Okay.
It was another D word.
Yeah, we're pretty flexible here. We allow you to defer.
Yeah, we're allowed to, because you're allowed, it's an accredited course, so you can defer and all sorts of different things. So through personal reasons, he's had to defer his spot, which means there's no use me mentoring if he's not studying and he's not working through the course. So it actually opens up one spot in my 10 traders. So if you're somebody who's super keen on the market and you're prepared to put in the time and effort and you want to work with me mentoring, there's some terms and conditions around. You do need to enroll in the diploma course, and you will need to do that in the next week to be a part of the mentoring program that I'm doing. But if you are serious about wanting to be a real kick-ass trader and you want me to work with you and help you and mentor you, get onto the phone, email, whatever it is, and talk to our team about the criteria to get into the mentoring. I don't accept everybody. I have rejected quite a few people because you really do need to put in the time and work and effort to make sure that we get the most out of this. But give our guys a call in the morning if you're serious. As I said, you do have to enrol in the diploma, and you get all these extra specials as well that they'll talk to you about. But if you do want to take out that one spot, let us know. It'll go really quick, so don't muck around. But let's get into the next 3 stocks, and then we'll go back into the chat.
Why not? All right, so we've got here, Celtx is one of the next ones we've got there in this lovely yellow colour. CTX is the code. Now, look, I haven't liked Celtx for a long time, not until I saw this movement on the stock where it actually, it's almost like a flush out of anyone who was going to sell has actually sold
it.
right
I
at
actually
that point.
really like Celtx as a stock, and I do like the energy sector coming up.
Okay, great. And looking at Celtx going forward, we can see that it's starting to move up really nicely. And this week, a close is really nice and high on the bar. If it stays that way for the week, I'd say Celtx is likely to go higher. And look, the great thing about it is that there's a low not far away from the current price action here. So in terms of weighing up risk when you're looking at it, using either initial stop loss as a percentage or looking at a physical point to set your stop loss, it's actually quite reasonable. So you have to weigh up what's more likely to work best and what the back testing actually tells you. So let's just have a look at the monthly chart just really quickly on Celtx, expanding it. The history is really interesting on Celtx. It's a really nice trending stock, and we've had some really good trades on this over time. You can see there's a really strong support level across there, which is
mind-blowing trades on this one.
Which is one of the reasons why I like Celtx, right? Because it's just it's actually come in on time, what we call time. So when we're studying stocks, we put together price, pattern, and time. All of those things like Gann. That was what Gann had said you have to do to be successful long term. So that's what we do. So looking at the stock, you can see there's a really strong support there, and I like it at the moment.
I like it very, very much.
Vocus is another one. Can we talk about that one now?
Yeah, we can talk about this one. This is our third one. This is sort of one of my pet little ones I like to talk a bit about.
See, because I like TPG or TPM, and you like this one.
Well, only because I was at the Microcap conference. It's on every year in Melbourne, and I I heard the CEO speak there, as I did with Jumbo Interactive, which has just gone phenomenal. And so sometimes you can pick up some of these sort of micro caps early. And I saw this guy speak way back inside of 2000.
But then we're telling him not to pick up the little stocks and just stick
No, I didn't.
Stocks.
No, but you sit there and you put them on your watch list and you wait for them to get some momentum underneath it, because the roadshows are about getting people like me interested into them to put more money into them.
The fund managers.
Yeah, the fund managers to get more into it. Yeah. And whilst they're not part of our horizon, it's still, when I see a good idea, like Nearmap's another one I've seen, and Sat something.
I'm just playing the motherly role here.
I know,
looking out
you
for
are
the
protecting
children.
them. But I do like this stock, and it is looking better, above about up above that 370 mark. I think if it gets through to that, I really do think it's going to start to move up quite nicely. And Vocus is big in the telecommunications sector. I mean, it's quite big, and it'd be surprising how big it actually is, and especially in the business-to-business range, in optic fibres, those sorts of stuff, and data transfer. So, but yeah, I like the stock, and it's looking quite nicely. And I think it's changing personality now than what it was 8-9 years ago, because it's got more volumes coming through it. It is much bigger, so. Yep. But I do like it.
Shall we move on now?
Yeah, we can get back into the chat now, can't we? Because Wally is from... Did Wally? Oh, that was the other one. We've got one more.
We've got one more.
Jeez, okay.
He's on the ball here.
You are.
All right, now we're looking at Wally Punt. I just had to get him to say that.
This is your favourite stock.
Yeah, this is one of my absolute favourite stocks, Wally. Okay, and now looking at the stock, you can see it trading sideways around that $14 mark. Has been really strong for this stock over time, $12 to $14. Now there's a gap there on the weekly chart. I'm not such a big fan of that right now. It's putting a question mark in my mind, but there's a really important hurdle for this stock that it must jump over. I don't think I should tell them what it is, or should I?
No, that's for the paid seminar that we're going to do tomorrow. No? Okay.
Looking at it here, I think that we're actually, if we see a move back above this 14.35, then it could be well on its way again. So, it's
How about unless
really
they
nice.
hit the subscribe button, you don't tell them?
Yeah, look, I'm not saying it's a buy at that point,
And the
because
like.
there's some things that have to be met before this would be a buy. However, it's starting to look much better, Wally, and I've always liked some of these service companies that look after the mining
Monadelphous is
industry.
another one, yeah.
Yeah, Monadelphous is a great stock. Really enjoy that from a trading point of view, and really good solid rules that you can get when you analyse the history of it to make some good money over time.
Yeah, look, we've got a lot of people on tonight. Actually, I think we've broken a record of people on live, and I know we get a couple of thousand people
That's awesome.
watch our show over the coming week. And like I said last week, I know
Where's
half
the
of
fireworks?
Where's the fire?
Where's the champagne?
Fireworks is when you're telling us how good these stocks are. So, but please hit that subscribe button. It
Yes,
really does
do.
help us, and hit the like. I mean, I want to get over
So what's your goal?
5,000 subscribers.
Yeah, 5,000. And what are you going to do if you get 5,000?
I'm thinking about doing a special online
Will
seminar.
you run around in your underwear if that happens?
I do that anyway.
Okay.
It's not something special. Let's
I'm
get
sure
back,
they don't want to see.
Let's get back to the stocks. Okay, Veronica's asking about Rio. She said, how far might Rio go up, and will there be a chance to buy below $88 in the coming weeks? She also,
Okay.
yeah, so I'm not sure where she's saying why a chance to buy it below $88.
Look, that's because, now can I just say, as someone who started out in the market from a point of view of knowing very little about shares and looking to buy stocks, it was always about, well, okay, people told you, well, if it's trading back at $88, then you should buy it. If it's trading back at $82, then it should be a buy because it's cheaper there and it hasn't been trading there for a long time, or it might have been the 52-week low or something like that. We're looking for it. So if it goes back below this level, then I'll pick it up, but I'm not willing to pay a price that it's currently trading at. So whereas the way that we trade, we're actually looking for it to rise.
That sounds silly to me.
Yeah. Look, I have discussions about this with the investors at the dinner table sometimes when I go out to dinner parties, and it's about allowing the stock to actually move up, give away that little bit off the bottom, and that's like insurance for you. Once the big money's behind it, then you know that you can get on board, so to speak.
But it's the same as those people that say, I'll sell if it gets to this point.
Yeah.
Or if it gets back up to this point, I'll sell it.
You can look at it the other way as well,
So
can't you?
it's, to me, that's just as silly. A lot of people do that. They see a stock fall away and they go, oh, when it gets back up to what I paid for it, I'll sell it. Or if it gets to this, it's either it's a buy or a sell or a hold. So it's one of the.
Look, I'm really excited about the mining stocks, even though we've seen this big reversal. From the point of view, if you look at, we go to Rio, and I personally like BHP and FMG over and above Rio, but
Yeah, so do I.
we still haven't gone through the all-time high with this stock. So there's got to be more upside in this over the medium to long term. But right now it's on the downside. It doesn't mean that I'm saying it can't fall further, because it could continue to fall quite a lot further, and then you pick it up at a much safer time, at a much safer point. And that's what we're really on about, is buying the shares at the safest point and taking the safest part of the run.
Cool.
So that's Rio.
All right, so Craig's got RWC and then Bob for CGC.
Okay.
And I'll look into the chat and see if I can find some more. We've got another question. Veronica Menezes. Too many Zs for me. Hi team, I mistakenly exit out early of a stock by not checking the trailing stop I placed. I didn't want to exit at that price. Would you repurchase the stock in these circumstances? The answer is depending on what the situation is. Like I was saying earlier, it's like context. And you'd only repurchase if the stock was showing you that it was strong and it was moving up. Just because you exited doesn't mean you've got to get back into it. Just move on to another stock. But it was always about what the stock is, what's it doing at the time. And that's also a bit of a learning lesson about setting stop losses and where you're setting them. I find a lot of people set them too tight. That may have happened to you. And also setting them on the platforms. We teach our traders not to necessarily do that.
Yeah, that's the big one, because that's where the mistake can happen. Because what you're saying is the best thing to do is to go away. And I always remember you saying this, just let the market close. Go away and then make your decision in the unemotional time, if
But
you
it's
like.
that fear. It's that fear of losing money why people put their stop losses into brokers' platforms, and that fear of not wanting to lose means you lose more.
Yeah.
And
Look, someone said to me they were going away, and they needed to set their stop losses in the platform. But that's a different story.
Whole different story.
But why have them open anyway? Why not just sell them before you go?
That one thing costs more people than our course ever does cost anybody.
Setting the stop loss in broker platforms.
Yeah, they're setting broker and they're getting stopped out of trades and not setting the stop losses and not allowing things to unfold. And that fear of losing costs people so much more money than they'll ever know. And that's sort of what we were talking about a few weeks ago. And you don't know what you're losing or you're not making because of the way you're trading and way you're investing. Now, I'm not saying this lady's doing that, but my guess is that she sets a stop loss in the platform for fear of it falling away too much.
Yeah.
Whereas if you've got good rules, you don't need to fear that sort of stuff. And really, that's what it's about. So let's move on to the next one. So we've got Craig.
Okay, we've got Reliance World Corporation here. This is actually starting to look a lot better now. Look at it. It's come off this low on the monthly chart.
Craig's bought it at 402.
Okay, so it had actually fallen 50% in value, which is an interesting milestone for this stock. He's bought it at what, 402?
402, and he said he bought it on the rules in my book.
Okay, awesome. So he's bought it on a trend line rule.
Well, that's what, in theory.
I'm looking.
Did he fail?
No, actually, I think there is probably one there somewhere, but I just,
But 402?
Yeah, so he's probably got it there somewhere. So he's got it when it's come up here somewhere, I'd say.
Okay.
So looking at it, it's moving up nicely. A nice little consolidation has happened there. I know we're not buying on daily charts, but I'm just going to have a look and see whether it's unfolded in an orderly way, and it looks really quite good. So I'd say it's a good stock at the moment.
I think he's fine at the moment.
Well.
Make sure you got a stop loss on it, Craig. Next one, Bob, CGC.
CGC. Bob, okay, where's Bob come from? Do you know?
He asked the question, I don't know, he said, hello guys, great show. Thanks, Bob. Good on you.
Thank you,
please
Bob.
help with your insights on CGC. I asked the question last week. As new substantial holders came on board and the trading activity has been strange now in a trading halt.
Well, substantial holders have come on board, but look, the price is not reflecting that.
Yeah.
So this is the interesting thing. Regardless of what the news tells you, look at what the price is doing.
Yeah.
So it's just going sideways at the moment. And I'm not saying that it's going to fall away because it may actually move up from here. But I'd really want to see a strong move above a lot of this resistance.
But we think there's something smelly going on with that, isn't it?
Given that the commentary is coming out and it's contrary to what you'd expect.
Yeah, read between the lines, Bob. Next one.
Yeah.
Okay, so another one. So we're going to keep going. We've got Aurelia saying, hi, all interested to know how a company...
Dale?
Aurelia.
Aurelia?
Aurelia.
Oh. Hi, Aurelia.
Aurelia. There was a movie with an Aurelia in it.
Oh, really?
I can't remember the name of it, but it was a good movie.
Somebody
Hi,
type it
all interested to know how a company which has a buyback affects the stock price. Thank you for your live videos. Do you want to answer that? And I'll look more into the chat.
Look, when the company's doing so there are things called off-market buybacks. There are things called where they actually offer clients or retail holders the opportunity to buy the shares, and they offer institutions the chance as well. This actually can cause the stock to... So if you actually, if they're buying back the stock, it actually reduces the number of shares essentially on the market that are trading. So in actual fact, it should be positive for the share price when they're doing that. Doesn't always mean that it is. And sometimes when these companies are doing these off-market buybacks, it can artificially prop up the share price. And when the buyback stops, you've really got to look and see what happens to the stock after that point. Because if it then falls away, then you know that the company was having a significant effect, or the company's corporate action was having on the share price. So if you're offered a buyback, that's another thing altogether. If they're offering to buy the shares from you, and you've been holding them for a long time and you were thinking about selling some anyway, it could be a good opportunity to offload some stock and then not pay the brokerage for that. But look, I'm not a big fan of going into some of these corporate actions. It really depends on the situation. Because I've had people say to me, "Oh, look, I've got this stock and I've got this opportunity to sell my shares or to buy some additional shares," but they were already in loss at the time when they sold that. And it's always about looking at the chart and seeing what the chart's telling you as to making the decision to do it, even in the situation where you've got a buyback underway. So that's really all I've got to say on the buybacks. Did you want to say something else?
No, I think you've done it well. Grant's asked, do you perform your technical analysis with dividend adjusted charts? The answer is no. We don't do that. We do it with corporate actions adjusted, but not dividends. And what we mean by if a stock split, that sort of stuff, our charts are all back adjusted with the data to make sure that the trends are relevant.
Yeah,
and
otherwise there'd be a
pricing's
big
relevant.
gap in the chart. And sometimes that
Yeah.
really, in the past, it's got better over the years, I must say. But I can remember, going back 20 years ago, looking at a chart, and there was a big gap in the data. And they'd announced this corporate action. The corporate action had happened. The chart hadn't been adjusted yet because they hadn't actually given the information back to the ASX to tell them what, should be happening. So that really used to annoy me, but it looks like it's clean. They've cleaned a lot of that up. The timing of that sort of thing
It's getting
is
better
improved.
with modern technology.
Yeah, because otherwise it leads people to think, all of a sudden the stock's cheaper or it's more expensive. It's gone up. But
Well, it's a lot
in
easier
actual
now.
fact,
We've got
it's
off
not.
that little slate and chalk, isn't it?
Yeah.
We're now onto a computer.
It's all
so
relative,
It's much
yeah.
better. Yeah, I remember. Yeah. Both
Okay.
Janine and I,
He's rubbing it in.
I was actually chatting to one of the guys I'm mentoring the other day, and he was doing some bit of hand charting, which is an
Oh, great.
exercise we do in the course. And he said, should I keep hand charting? I said, absolutely. I said, Janine and I, that's how I did it. I had a dining room table that was full of hand charts, and same with Janine.
Yeah, it was crazy actually.
I remember, Janine, going to your place one day, and we went into your officey room, and we opened the door, and all these charts fell on me.
Oh, I did not.
It did. This is like, it was,
You're
that
telling
show,
a long story.
those
This
shows.
is a short story that's becoming a
No,
long
I got
tale.
buried under charting paper.
you didn't.
I did. So,
I hand charted 20 stocks. Yes, that's true.
You did.
And I only threw I kept a couple just for
Prosperity.
prosperity, but I
to
did
show the grandchildren what a
keep
chart
them
looks
until
like.
about I think it was 10 years ago or something. I threw them out.
Yeah, I've still got a couple. I've still got a News Corp chart.
You put them
an
up at
ANZ.
workshops, don't you?
Yeah,
Sometimes to show
I put
people.
them up at workshops. So let's get into Jim PBH. I picked one out there, Jim PPH. I've got a
PPH.
P for Peter, H for Harry, B for Bob. He said, hi, I bought PBH at 270. I haven't seen Jim before, so well done. I'm picking some people that we haven't answered questions for. He bought at 270 and sold at 355. Well done. Looking to buy back in. The company's partnered with a US company for betting licenses in the States. Would value your opinion on a medium-term investment.
So have I got the right stock for a start?
Points bet. Yeah.
Okay, so look, it's taken off like a rocket. Now, not every stock will do this after it's floated on the market.
Not a lot of data, but yeah.
There's not I mean, this could be classed as a rarity to see this sort of thing happen. But, I mean, it's just kept going, trading higher and higher. Let's have a look at how far it's actually risen right from this opening point. That was way back in, June 2019. It's now trading at 422. So roughly, if I can drag that across, it's not going to let me. That's one of the annoying things about it.
Good on you.
No.
I've got a couple of other questions while you're mucking around.
You talk about that while I'm playing.
Well, no, you can keep talking about that. We've got a couple of other questions. Alan's saying, who's the best brokerage to use for products and cost? I've been using IG and ANZ platforms but don't like them. Thanks for any info. We just tell people to use their bank. We don't generally refer a lot of brokers. A lot of brokers want us to refer to them. But we don't, but we normally just go for the big banks. And, if IG are pretty good. If you don't like them, go to Citi or go to FP Markets. They're good. Saxo's good. They're all sort of good at the moment. There's not really sort of anybody I don't like.
What don't you like, though?
What
because
don't
the
you like?
platform's a platform.
Yeah, most of them are using Iris platform, like ComSec is Iris, and a few of them, a lot of that.
Maybe
but,
it's the user friendliness of the
and it's
platform.
not about cost too. It's when
But
cost.
what are you using the platform for anyway?
You're only
just
using it
putting
to trade.
to place a trade, isn't? I wouldn't be doing any analysis on those platforms because the charting's terrible.
It's CRAP.
Yeah.
Very much so.
That's
There's
a
another
technical
question. As Alan's also saying, he's saying, with these American companies going to free trades, is there anything like that here or coming? You don't get anything for free. It may look like it's free, matey, but it's not. And a lot of people trade FX because they go, there's no brokerage trading, but they have it in their spreads. And actually, quite often will end up costing you a lot more money. And there's an old saying that you get what you pay for. And as Buffett says, value is what you get, price is what you pay. So if you pay very little, you get very little value. So you ready now to talk about the stock?
Okay, 95% gain from when it first opened on the market down here.
That's pretty good.
So that's nice. Now, obviously, you're going to get people taking a profit now, so we're seeing that happening. So there could be a little bit more on the downside. Now, that's the weekly chart. There's not a lot of history, so it's really hard to analyse stocks that don't have the historical data for you to do that. And we'd like to see 5 to 10 years of data to get a good picture for what's going on with the share and being able to forecast it more accurately. So you can't forecast reasonably accurately this amount of data because we're only talking about not even a year, or maybe a year and a half.
Yeah, there's not a lot of data, is there?
No. So minimum 3 years you really want to see on a stock. Looking at FPBH, the other interesting thing about it is how far it has been rising in a week. So the moves up, you're talking at 19, 20%, 22% to the high. So it is moving really swiftly and nicely. But when you start to see a couple of weeks up and then 1 week down, you've seen 3 or 4 weeks up, 1 week down, only 2 weeks up and 1 week down, you know that it's starting to slow down.
It's starting to slow down.
Yeah.
Yeah. So
that's
and
really
I don't
what
know. He did. I think he said he had it, didn't he? He bought it somewhere and he sold it, and he's looking to buy back in again. So I just sit back and wait.
Well,
at the
there's no rule
moment.
to be buying right now.
No.
Yeah.
But anyway, so that brings us to all of the stocks. Sorry we didn't get to everybody. As I said, we wanted to cover some 5 stocks for us, so we took up some of your time. But hopefully you found those stocks valuable to you and some of the questions that we've had. And but I hope you also have enjoyed tonight's show. And thanks for participating. There's been a lot of stuff on the chat. And as I said, we don't get to everybody every week because there's a lot of people asking questions, but we try and get interesting comments out there and interesting stocks out there. So if you'd like to see the show grow, remember to share it on your social media. Remember, if you do like the show and you've been enjoying it, hit that subscribe button because it costs you absolutely zero. And Janine and I put a lot of effort into this, so it's just showing us that you appreciate what we're doing. So hit that big button that says subscribe and hit the like button. We'd love to get that. We want to get over 5,000.
And thanks if you've actually passed us on to some friends and colleagues. We really appreciate that.
So, but anyway, we'd like to, if you want to learn how to make more money, you stick with the show, and as I said, hit the like button there as well. But
also make sure that you put this show into your calendar so that you're back online next Tuesday at 7 p.m. If you cannot be with us live next week, we're always happy to receive your questions. So send them to info@wealthwithin.com.au. Just type in Wealth Within Live in the subject line, and remember that one spot that's left in that the mentoring program.
I think it's already gone. Somebody's almost talking about here, but I think it says you get your form in. But
okay, there you go. Well, if someone's taken it, then that's it, isn't it?
Well, I like to feel needed. It's good for my ego, isn't it? So, but that really does bring us to the end of the show. And thank you very much for being on board tonight's show, and thank you for your participation. And as I said before, we really do hope you enjoyed it as much as we have. As always, thanks for taking part. And we'll see you again next Tuesday.
I'm looking forward to the next 5 stocks and to you bringing my
the 5
boxing
stocks.
gloves.
Yeah, I'm going to bring the boxing gloves and the stock, and I might even bring a bell and a dog collar. The dog collars for the dog stocks that people show us. Okay. For now, goodbye, good luck, and good trading.
Take care.